Hello, chart watchers, and welcome to this Monday, July 22nd, 2019 Market Watchers live show with your hosts, Tom Boley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the market as we start off a new week, we got the Dow Jones Industrial Average currently flat, S&P 500 up 6, NASDAQ leading on a relative basis today, up 51 points, and the Russell 2000 continuing to struggle on a relative basis, up just 1 point today. 10-year Treasury yield moving back down as money rotates into the defensive Treasury area. You can see that the 10-year Treasury yield now back down below its 20-day moving average, down 2 points today to 2.03%. Volatility index rising here over the past week as the market, you can see the S&P sold off since last week. So the VIX is up, trying to get back through that 15 level. Currently, though, I'd say it's still in a downtrend, supporting higher prices in equities. Technology leading today and has been leading throughout this uptrend off of that June low. We'll talk about that more in a bit. Consumer staples struggling today, not a surprise after that bearish engulfing candle on Friday off of the uptrend. I would expect maybe to see some buyers come in around the 20-day moving average. Within technology, we've got some semiconductors breaking to new highs. Big reason for that, Goldman Sachs coming out with raised signs or moving from neutral to buy on a number of these various semiconductor components. We'll show some of those charts later in the show. Computer hardware also having a strong day today, currently up 45 points. You can see tobacco and drug retailers, the reason why consumer staples are lagging, both of these groups getting hit. This is a group, the drug retail group, that's been under pressure for quite some time. We did get a little bit of a lift, but we're starting to struggle again. Going back to tobacco, we had a big lift last Thursday. You can see the huge volume on this move to the upside. So a little bit more just profit taking here with tobacco. Halliburton came out with its earnings results, did beat on their bottom line. You can see a nice pop here. We'll take a look at their chart in just a moment. Not really impressed still with the long-term relative strength there, so I'd be a little careful. Applied Materials, Lam Research, these are two of the semiconductors that were upgraded by Goldman Sachs. You can see both doing extremely well. I know we've talked a lot on this show here, Market Watchers Live, on Applied Materials and how the relative strength has been building. This is a company that is at a multi-month relative high versus the semiconductor group. And so it's not a surprise to start seeing some of these upgrades coming in here. All right, Aaron, it is the second week of earnings season. And I tell you what, it was hot last week in terms of some of the earnings. And it was very hot where I went for my golf trip.
Yes, while you were gone, I actually had to do those earnings spotlights and key earnings reports. And boy, they were long charts. I think 2 days I had 2 slides for how many there were. So I'm glad to have you back to start doing those again.
Well, I'm glad to be back. I tell you what, though, the earnings season really is just starting to kick in. I mean, we had some big companies reporting last week, kind of kicked things off. But we've got Facebook, Amazon coming up later this week. I think Google, Intel. And then next week, I mean, the floodgates just open with the earnings report. So it's going to be very exciting for the next couple of weeks. Those who think maybe that the market is overpriced are going to be looking for earnings shortfalls to support that argument. I think earnings are going to be strong. I think they're going to be stronger than expected. I think the market goes higher from here. But we will see. We will see.
Yes.
We do have a special guest with us today, though, Marc Chaikin from Chaikin Analytics. Mark, it's been a little while. How are you doing?
I'm doing very well, trying to stay cool in the Northeast, but
yeah, we were talking about that before the show. You also had some heat. You were up in Connecticut, is that right?
We are. We're back up where we used to live, and it's beautiful up here. Not quite as hot as it is where you were, but it's all breaking this afternoon. Thunderstorms, and
yeah,
hopefully that coincides with the market able to move back up and make new highs again above 3,000.
Yeah, I was going to say, do you think with all the earnings coming out, you think we're going to have some market thunderstorms, or do you think that we go straight up, or what? Any ideas there?
Straight up's going to be hard. We've really made a lot of progress since the December lows, but I do like the fact that semiconductors are leading. By the way, just as an aside, the Chaikin Power Gauge rating, our quant model, has had bullish ratings on AMAT, Lam Research, and Micron, which is the other big mover that Goldman Sachs put a buyout on today.
Yep, I think that's a great point. I know we're going to talk a lot about relative strength this week. This is a special week here at StockCharts, and for Market Watchers Live, but we got a number of guests, starting with Mark today. We're going to talk a lot about relative strength. And the charts don't lie, Mark. I mean, you pointed out Applied Materials and some of these others. I mean, they have been showing relative strength for a while. This didn't just start today. And now we're starting to get some of the fundamental news, some of the upgrades and so forth. But the money's been rotating there now for quite a while.
Yeah,
All
well,
right.
smart money always reflects, what's going on, and you measure that with relative strength. Dave Keller put his whole career into that at Fidelity, so we all know how powerful that can be.
Absolutely. And Dave Keller will be with us later in the week to talk a little bit about that as well. I know we're going to have you in here in about 15 minutes or so, Mark, if you can just hang in there with us. I know everybody is anxious to hear your thoughts on relative strength and some of the stocks you like. Okay, Erin, I would say let's do this.
Absolutely. And it is Relative Strength Week. And we have a lot of great topics and guests. Tomorrow, Tom and I are going to talk about relative strength versus the RSI, the Relative Strength Index. Very different. And we'll talk about that. Gaddis Rose will be with us on Wednesday. Both Arthur Hill and Julius DeKempener will be with us on Thursday, and I know we will be on camera for that, so it should be a great roundtable. David Keller will be joining us on Friday. And then the following week, Tom will be doing August seasonality. Today is a jam-packed schedule, and we are very pleased to have Marc Chaikin with us. He's going to tell us about finding winning stocks using relative strength. Our first 10 and 10 symbol will be AT&T. Monday Setups, of course, is Monday. We'll cover that, and then I have a sentiment update for you at the end of the show as well. But let's go ahead and get it started. Technical news and headlines.
All right, there were no economic reports out today, so I'm going to go ahead and jump right into the 10-year Treasury yield. Talked about this a lot lately when we saw the PPO starting to turn up, even though the yield kept going lower. Just talked about the possibility that we would see a reversal. We were down under 2%. We did get a jump up to about 2.15. Normally, when I see a positive divergence like this, I look for perhaps a PPO reset where we just simply get back where the shorter term moving average, longer term moving average get to be about the same. That represents that zero line. And then you can see also the 50-day moving average. A lot of times when you get this positive divergence, you'll see a trip back up there or close to it before we possibly go lower. I know a lot of folks will look at the positive divergences and look at that as a long-term bullish signal. I don't view it that way. I think it's short to intermediate term. And then we wait to see whether or not we get the longer-term confirmation, which would be, in my opinion, moving back up through the 50-day, moving back up through that PPO center line. Haven't seen that yet. So the 10-year Treasury yield to me is kind of in this range. We've got the overhead resistance now. I'm going to call it 213 to 218 to the downside. We had that recent low to open July down around 195. We're sitting in the middle of it today, 2.03. And of course, next week we have the Federal Reserve meeting, and I think everyone is anticipating at least a quarter point drop in the Fed funds rate. Some are calling for 50. I don't think we're going to see it. I think we'll see 25. And with the Fed perhaps saying that they're going to be ready to do more if needed. And I think the market's going to like that. But anyway, let's get into the earnings. Their earnings season is kicking into gear. We do have a number of reports out. I mentioned at the top of the show, Halliburton, 35 cents versus 30. They did beat on their bottom line. Lennox International, not so fortunate, came up short. They missed on their revenues. They lowered guidance. I'm kind of surprised at the chart. We'll look at that one in just a minute. RPM International also came in with a strong report. Check out the companies that will be reporting after the bell. The number of companies reporting this week will increase throughout the week and into next week. So if you are holding stocks and you're not sure whether you want to hold them into earnings, I would check the earnings dates and at least make sure when your companies report, and then you can make a decision as to whether or not you want to hold into earnings. I'm not a fan of it. Even companies that look great heading into earnings, if they come out with great reports, sometimes it's built in. You see a little bit of a gap up and then the stock moves down for a period of time. I think companies that are beating, though, and do come back down represent great opportunities, especially the strongest relative performers when that happens. Last quarter, I can tell you Chipotle Mexican Grill was a perfect example. They came out, beat top line, beat bottom line. Stock went down like $50 in that day of earnings. And then the stock recently pushed back to new highs. So there are opportunities. I think we'll have a bunch of those as we move forward into earnings season. All right, let's take a look at these charts here. First, I'm going to start with, let's talk about Halliburton here, because Halliburton did come out with a nice report. You can see that we are higher. Let me update, make sure I've got the most recent price. But we are at 23.35. And if you notice on the chart here, this 24 to 25 area, we had a double bottom and tried to bounce off that, failed. And look at the volume pickup as we fell below that 24, 25 area. Before earnings, we got up to about 24, which wasn't, we weren't able to push through that resistance level. And then we turned back down. Now with pretty decent earnings, at least bottom line decent earnings, the stock Halliburton's moving back up. They did miss on their top line, 5.93 billion versus 5.97 billion expected. So a miss on the top line, a beat on the bottom line. I think we're still kind of in this going nowhere area. And I think when you look at the relative strength here, you can see that Halliburton for the last several months has been underperforming its peers until today. I think there's still some work to be done here. I'd be a little careful with Halliburton. RPM International. This is one that came out. They beat on their bottom line, but they also fell just a little bit short on their top line. They guided in line. This is a specialty chemical company. Nice volume. It looked like it was going to make a breakout and is failing. So unless we get a big reversal and get stronger later in the day, I think that this is a stock that maybe we pull back on, maybe get back down closer to that gap support area. And LII, Lennox International. This is another one that came out. They missed on their top line, missed on their bottom line. They guided fiscal year 19 lower. This one was kind of a surprise to me. I would have expected a decent report based on the way the stock was trading into earnings. I don't like these companies when all of a sudden they miss everything and gap down. A lot of folks selling, and of course that means market makers are on the other side of the trade, on the long side. So I think that's why you might see a little bit of a bounce off of this level. But I'd be real careful if the stock doesn't get back through gap resistance and that 50-day moving average. If it moves up, fails, and comes back down and breaks below 260, I would have a stop there. I'm not too excited by these companies that miss and lower guidance, especially after they've been in an uptrend, because that signals to me that things were in pretty good shape, or at least that's what Wall Street expected. Didn't get what they were looking for there. All right, last thing I want to do, let's get into this scooter mover. There was a smaller company that was on here earlier. I'm looking to see if it's still on here, and I'm not seeing it, but I'm going to go with it anyway. DRRX. It's a small stock. Actually, it is still making this breakout. 90 cents is a big level, and I don't usually talk about these stocks under $1, but I do like this move. Look at the volume coming in, trying to get a close above that 90-cent level. And if I pull up a weekly chart, you will see that this is a pretty big level here, trying to get through 90 cents. Again, not my kind of a trade, but for those of you who like these high reward to high risk types of trades, I think a close above 90 cents here would be the first one of 2019. I think that could perhaps launch the stock to the upside. So maybe something to watch this afternoon into the...
Tom, let me jump in. They announced a licensing deal with Gilead before the opening. That's what accounted for this big up move. Could be a big deal for them.
Yeah, appreciate it. So I think you're getting your confirmation if we get that close above 90 cents from a technical perspective, which I think would be big. And that is your scooter mover of the day.
All right, it is time for some upgrades and downgrades. Let's go ahead and get started right now. First upgrade is going to be Hershey. UBS upgraded it from a sell to a neutral, and they have raised their target from $100 to $145. So we're looking at a move. Let's see, I need a horizontal line here. There we are. So we're looking at a target right now for them right around the bottom of this possible flag formation. With the downgrade, I have to say I'm not really that concerned about it because momentum is still pretty strong here. And, you can still see a rising bottoms trend line here on the scooter. So we're still making that move to the upside, but this is the one that I really like, is seeing that OBV rising nicely since we saw this bottom back here at the beginning of July. So it has been upgraded just to a neutral, but I would be looking for a move certainly better than the 145. Next up, I'm going to look at Schwab. All right, here we go. Got to get my fingers working. All right, so with this one, I liked looking at this because from a, a longer term perspective, I can see a possible double bottom here. There's one of the bottoms and there is the second. And then if you want to look at where the confirmation line would be, interestingly, it lines up with this low here, kind of gets close to the low we saw back here too. So we got the breakout on that confirmation. The length of the pattern, you know, we've almost gotten to the upside target, but I would put it right about here. And then when you look at what the $50 was what they gave as their target. So if we come back here, there's your $50 line. So they're expecting a nice move here to the upside. Let me make this a little bit, there we go. All right, so you can see we still have a lot of upside potential here. I do like Charles Schwab right now, the way it's looking. Stitch Fix, we talked about this a lot last week with Mary Ellen and I. Not a really great look here for Stitch Fix, in my opinion. They did move it from a hold to a buy, and they have raised their price target to about $35, which would be right there at the bottom of this gap resistance that formed, goodness, a while back, and we still really haven't filled that gap back up yet. I think you could maybe make a case for reverse head and shoulders here. Here's where your head might be. There you go. And a possible shoulder here. And I think, again, that this is a little bit of a, it's a good pattern, I think, but we're getting that decline. Now, if we can hold above that 200-day EMA, I would certainly feel a lot better about this upgrade. Certainly could see that, but I don't like seeing a PMO sell signal right now, and the PMO is dropping down now close to the zero line. So not really thrilled with that look. And you can see clearly this rounded top going on here, but that's a really good area to possibly find some support at that 200-day EMA. Let's go ahead and look quickly at a few of the downgrades. Right now, we have Intercontinental Exchange Group, or ICE, and it has been in quite the positive rally. Look at this, really nice move. I suspect we might be able to see, yep, I think you could make a case also for a rising trend channel as well. Looks like we're getting a pullback toward that 20-day EMA. I would be looking for it to pull back just a wee bit more. This is the only thing that I look at and don't like really much at all, and that would be that PMO. So let me see if I can get that a little bigger for us. There we go. So you can see that the PMO right now is topping in overbought territory for sure and is heading lower. So it's something to keep an eye on for sure. All right, two more really quick. NBEV. And as you can see with NBEV, definitely making that move to the downside. They have, NBEV was downgraded from an outperform to a market perform, so they're putting it in the neutral category. I would look for it to fall again, probably, oh goodness, down here to that 275 area. I would look for it to test that low. And finally, Tesla. Everybody's interested in Tesla. Roth Capital downgraded it from a buy to a neutral, and they have moved their price target to 238, which would put it right about there. And we are, of course, above that. I would say the next area of overhead resistance, if you want to get, I think you could go in here. It matches with the lows here and the tops that we saw back here. But this is 200-day EMA is going to be the problem. That's all I have for our upgrades and downgrades. There you go. And we will be right back with Marc Chaikin. So stay tuned.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Rashke, and Ralph Acampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
All right, to begin our relative strength week, we have Marc Chaikin here, as we introduced him earlier. He does have 40 years on Wall Street as a trader, stockbroker, analyst, head of options for a major brokerage firm, but most of us know him for his indicators, and he did found Chaikin Analytics. And so we are pleased to invite you and see what you have to present for us, Marc.
Thank you, Erin, and I'm very pleased to be kicking off Relative Strength Week with StockCharts on MarketWatchers Live. This presentation is about how to find winning stocks using industry group relative strength. It's an approach that I've used for more than 50 years. So my background began with a very fine, fundamentally oriented Wall Street firm, but almost immediately I started using relative strength. And the reason is I had been introduced to someone named George Chestnut, who ran a mutual fund that had outperformed the Dow for over 30 years. And he did the original research on group relative strength. So I studied what he did. Then I tested thesis from a guy named Bob Levy, which was about stock relative strength. That was the core of my technical analysis that I combined with the firm's fundamental research, created Chaikin Money Flow to get a better feel for what institutions were doing. And then the culmination of my life's work, the Chaikin Power Gauge rating, which enables all of us to bring fundamentals into the equation, because it's so important, no matter how good your technical analysis is, to understand the underlying fundamentals, just like the drug stock that Tom was talking about. Big up move, good that it's supported by a fundamental story about a tie with Gilead. So I thought I'd start off Relative Strength Week with a very brief history of relative strength. It's not new, it goes back all the way to the 30s. This timeline is courtesy of Linda Rashke. Where I came in was with George Chestnut's work in the 60s, studied what he did, looked for the best performing stocks in the best industry groups. I've been doing it ever since. We're talking about 50 years. And then a guy named Bob Levy published a PhD thesis where he backtested relative strength, found 6 months was the ideal look-back window. And that's what people like William O'Neill really key in on. It's what we've keyed in on. And now at Chaikin Analytics, we have a new relative strength heat map, very similar to Scooter. So if you're using Scooter or not on StockCharts, I encourage you to do that. And then finally, I added to Linda's timeline, Cliff Asness, arguably the best quantitative manager, had over 250 billion to start 2018. Relative strength, relative momentum, one of his key predictive factors. Thought I'd start out with a little bit of the market to put everything in context. It's been a wild ride, as we know, in 18, 19. Lots of ups, lots of downs, but here we are, having just made a new all-time high on the S&P 500. As Tom pointed out, large caps are where the action's been, particularly in the NASDAQ now that tech is back up, and small caps have been underperforming. But let's look at a one-year chart of the SPY, the most actively traded instruments in the US market. We love to read the chart from the bottom up because at the bottom of the chart is our power gauge rating, combines fundamentals and technicals when we're talking about ETFs. Predictive, new, it's bullish on the SPY. We look at Chaikin Money Flow to see if the institutions are buying the ETF, and they were buying it big time in January, February, March, and they've come back in again. Institutions use the SPY as a way to get instant equity exposure if they're bullish on the market, but they don't have their stocks teed up the way they'd like. So what we've seen here is institutions are coming back in near the 2950, 3000 level. But what happened in May? We got a pullback of 6.5%. And if you were watching CNBC, you would have thought the world was coming to an end. So let's put pullbacks into perspective because this is so critical. This is just normal market behavior. Since 1945, we're talking about almost 75 years, there have now been 79 declines of between 5 and 10%. We call that a pullback. The average decline is 6%. So what happened in May is typical. Typically last 4 weeks. That's exactly what happened. We peaked on May 1st. We bottomed out just before the beginning of June. And the good news is the recovery to new highs is typically 1 month. So pullbacks are your friend. Ignore the headlines. Look for buying opportunities. Where do you want to find them? In the strongest stocks, in the strong industry groups. Now, this is one of my favorite charts from StockCharts. It's a weekly chart of the S&P 500 index with the 52-week new highs, new lows at the bottom. And we're reading a lot now about spike in new highs in early June and now a bearish divergence. But as you can see from the chart, this has happened many times in the past, and that bearish divergence doesn't necessarily mean that we're going to sell off sharply. We're also seeing put-call ratio, sentiment indicators showing the public coming into the market. So there's a lot of talk about technical deterioration, but what we're keying in on is a pattern that's been so reliable. And it looks at what stocks and bonds have done through the end of June. And we find that going back to 1980, there have been 9 prior instances where both stocks and bonds were up 5% or more in the first half of the year. That has really bullish implications for the balance of the year 2019. 8 out of 9 times, the S&P 500 was up after that dual stock bond performance. And the average gain was 11.3%. You add that up to the 2950 level and you get a big upside target here. 8 out of 9 times. This is the 10th time that's happened. We're bullish for the balance of the year. How we get to those higher numbers, maybe 3,100, 3,200 on the S&P, is never an easy road, especially once earnings season is over, but we've got a lot of potential influences. What I'd like to do is concentrate on the trend of corporate earnings. Interest rates, obviously very critical. That's why Tom leads with them almost every day. Sector and group strength and weakness. That to me is the key for finding the best stocks that are going to outperform the market and knowing what to avoid. So stock selection is very critical. And if the problem is what to buy and when to sell, our solution is Chaikin Analytics for both iPad and desktop. We've got a really wonderful following from the StockCharts community. My chief market strategist, Dan Russo, does a video, 15-minute video every morning that you can see. And we think that there's plenty of potential, but it's about knowing what to buy. And for me, as I said, for over 50 years, I've recognized that fundamentals drive the market. That's what the big institutions like Fidelity and T. Rowe Price look at, but that emotions drive the market to extremes. And we've certainly seen emotions play out in the market, not just that little 6.5% drop in May, but the fourth quarter where people basically panicked into Christmas Eve, and then that big rally up where a lot of people were on the sidelines because they were fearful of the market. So for me, the path to profits for over 50 years has been to combine fundamentals and technicals. Problem is, how do you know what the fundamental outlook is for a stock? You can't really rely on the brokerage firms. They're right some of the time, but not all the time. They rarely put out sell recommendations. So I created the Chaikin Power Gauge rating in 2010 to synthesize everything I had learned from our institutional clients when we had an institutional brokerage firm that we sold to Reuters. I wanted something simple but powerful that reflected the various styles and time horizons of the market participants. And we'll look at that in a minute. So the Chaikin Power Gauge rating is a simple display with a lot of number crunching going on under the surface. And now we have ratings for all active equity ETFs in the US combining fundamentals and technicals. And we're going to show you how to use that approach to find strong stocks. So what the Chaikin Power Gauge does is it makes the complex simple. It takes all that fundamental data on the right side of the screen, distills it down to the gauge on Starbucks, which goes back to late December, early January, when Starbucks had a very bullish rating in the Chaikin Power Gauge. Interesting thing here is the financial metrics, which are the value metrics that a Warren Buffett would use and constitute 35% of the model, were actually bearish at the time, but yet the overall rating was very bullish because everything else was bullish, including the analysts and the insiders. So it's an eclectic model. It looks at 4 different aspects of the market: value, growth, technicals, and sentiment. Within each of those 4 components, there are 5 factors. Technicals are only 15% of the model, but notice that within technicals and sentiment, you've got 2 relative strength indicators. In the technical component, you've got relative strength to the market, and in the sentiment or expert component, you've got industry group relative strength. Industry group relative strength is one of the most underappreciated, most powerful tools you can use. And the good news is that you can measure that in StockCharts with Scooter. Really powerful way to see if an industry is outperforming or underperforming. So the proof for me is always in the performance. This is the performance of the Power Gauge rating going all the way back to 1999. 11 years of that is back tested out of sample, but everything from January 11 forward, which mirrors this chart, is real time. Average very bullish stock up 18% on an annualized basis. Average very bearish stock flat even after a 10-year bull market. If you combine that Power Gauge rating with relative strength and Chaikin money flow, you've got all you need to know which stocks you want to be looking to buy, and then you just need a trigger methodology. So what we've done is encapsulate that into a disciplined methodology that's reflected in this pyramid. Successful trading demands a disciplined methodology. At the top of the pyramid, the Power Gauge rating to tell you the fundamental potential of a stock, and industry group strength. Very important. It's the basis of this webinar. Bottom of the pyramid, Chaikin money flow, which many of you are familiar with through StockCharts, and Chaikin relative strength, which is a heat map of relative strength that you'll see in a minute. The sweet spot are the buy and sell signals. We have 6 pairs of signals. They're either filtered by relative strength or the Power Gauge rating. But now we actually do the analysis for you because a lot of people don't have the time to loop through charts. So we've developed what we call our pre-trade checklist. Notice that 2 of the factors are relative performance, relative strength to the market, and industry strength. Stocks in a strong industry group like semiconductors or software, you've got the wind at your back. And we're going to show you the checklist for a couple of stocks as we go through the Chaikin process. So let's start out with classic Chaikin bulls. Power Gauge rating is bullish and relative performance to the market is strong. So relative performance is and always will be, for me, the decider, if you will. We want to look at Chaikin money flow to see if the institutions are on board. But let's take a look at a classic Chaikin bull. This is Fair Isaac. Probably don't know that name, but you do know the symbol FICO because this is our credit score. So let's look at this chart from the bottom up. Power Gauge rating is bullish. That means the fundamentals are right and the stock is likely to outperform the market. It is outperforming the market and has been since January. So we like to say the market agrees with the model. No matter how good your fundamental research is, if the market doesn't agree with you, guess who wins? The market always wins. Then we look at Chaikin money flow and we see that the institutions have been buying Fair Isaac big time actually since December. So in December on 24th, Christmas Eve, when the market made a big new low on the S&P at 2350, FICO barely broke the previous low, went back into an uptrend, had a couple of positive earnings reports, and you see a buy signal that triggered just recently. If you look at the checklist, it reads the chart for you. Everything is positive except for our overbought, oversold indicator, which is dropping back down out of overbought territory. We'd love to buy the stock on a pullback, but that recent signal in a stock in a strong industry group, computer software and services, was one of our signals oversold by, that's a new 8-day low on a stock that has a bullish power gauge rating. So there it is. There's the whole picture. That's how you combine fundamentals and technicals, and relative strength plays such a key role in that, because when a stock's outperforming the market, institutions are looking to buy it on dips. We've got a screener to find these stocks, and Tom talked about how NASDAQ was outperforming today. Well, back in March for a webinar that I did, NASDAQ was outperforming, and so I took the NASDAQ 100 and I applied all of those factors that we saw in the pyramid. Wanted a bullish power gauge rating, wanted the stock to be in a strong industry group, and we wanted money flow, Chaikin money flow, and relative strength to the market to be strong. Narrowed the NASDAQ 100 down to just 9 names, and we're actually going to look at 4 of them today, because these 4 names have been the market leaders for the last 4 months. Cadence Designs, which Tom wrote about in his email this morning, Comcast, and so forth. These were the leading stocks, and we found them with this very simple screening process. You can do that too. Classic Chaikin Bear, these are the stocks you want to avoid. Power gauge is bearish. That tells us the fundamentals are unfavorable. Underperforming the market, there it is again, relative strength, weak. And Chaikin money flow is red, not green. And lo and behold, Tom, great minds think alike. Halliburton has been our poster child for classic Chaikin Bear for over 9 months. Now, why is that? Power gauge has been bearish, so the fundamentals are not good. Relative strength to the market has been weak for 15 months. This stock has just been under pressure. Institutions selling it, even on the rallies. So if the institutions are selling it, smart money's getting out, you need to get out as well. And you see an example here of our relative strength sell signals. I'll just explain that because you can do this in StockCharts. If a stock is underperforming the market, so in StockCharts speak, that means Scooter is down at the bottom of the page, and it rallies above its 21-day exponential. When it drops back below the 21-day exponential, it triggers a relative strength sell signal. The reason I like this signal is because it's accurate about 70% of the time, as long as Mr. Market doesn't get in the way. And it persists for about 4 to 8 weeks. So you can put on options trades. You can be short the stock. You can do a lot of creative things if you have confidence that it's not just a trading move that's going to stop when it gets to the lower volatility band. And you see 3 examples of relative strength sell signals in Halliburton. But bringing in this whole group concept, this is the XOP, and that's why ETFs are so fabulous, because we used to monitor industry groups, but there were no tradables, and people would trade the Fidelity sector and industry group mutual funds. Now you've got liquid industry group and sector ETFs. So this is the XOP, and notice that the power gauge rating has been bearish for 6 months. So if you combine a weak stock in a weak industry group, you're talking about stocks that you need to avoid and look for put buying opportunities. We love vertical put spreads. By the way, nothing in this presentation is meant to be a recommendation. We're not licensed with any federal estate agency. This is just for informational purposes. So what we've been talking about, fundamental and technical analysis, is something that we actually put a label on. We call it the dynamic duo, the Chaikin power gauge rating to monitor the fundamental potential, and Chaikin relative strength, that red-green heat map, to tell you what the market thinks. And this combination finds big winners and losers. Just be aware that relative strength can stand alone as a bullish or bearish indicator, but basically those are your momentum stocks, what I call the hope and dream stocks, where they can rally dramatically without fundamental underpinnings, but you're on a high wire without a safety net. So please use stops and admit defeat if it starts to turn around, because the fall can be dramatic, as we'll see in a minute. So 2 examples of the dynamic duo on the upside. Here's Starbucks. Looking at the chart from the bottom up, power gauge rating was bullish back there in January. Stock had been outperforming the market since October. How do we know that? Our relative strength heat map. This is like a stochastic of relative strength. Think of it as a 6-month stochastic of relative strength line. When it's red, the stock is underperforming the market. When it's green, it's starting to outperform the market. And you can monitor that in Scooter, as we'll see in a minute. But then we get these relative strength buy signals. Again, stock is outperforming the market, dips under its 21-day average, and rises above it. So this is your entry point, and you can expect 4 to 8 weeks to the upside in this case. This is what it looks like in StockCharts. There's Scooter at the bottom, trailing up above 90. Right above that, we have Chaikin money flow. The only missing piece is the power gauge rating. We know that the market agreed with the model. That's why we think fundamentals are so important. This has been an incredible uptrend. Power gauge right now is neutral because valuations are very stretched. But Starbucks has gone from basically 63 when that first relative strength signal triggered to a big move above 90. It's an extraordinary move for Starbucks. Big turnaround in the company and so forth. Now let's look at the dynamic duo on the downside. This is an REIT, Macerich. They're getting hurt hard by all these retail store closings. This chart ends in April of 2019 when I did a webinar. Power gauge was bearish. It was underperforming the market. So there's the dynamic duo on the downside. You had gotten the relative strength sell signal back in September at a price of about 58. And smart money was selling. Even on the rallies, Chaikin money flow didn't go green. And notice that you had 2 sell signals. These are the relative strength sell signals back in April with the stock at around 41. So what do you think happened to the stock based on everything we've talked about? Think it went up or down? Raise your hand if you think it went down. And I hope there are a lot of hands raised out there, because here's what happened. With smart money selling, the stock dropped from 41 all the way to 33. Relative strength is still terrible. The power gauge has turned neutral, but with Chaikin money flow negative and the stock underperforming the market, it's a stock to avoid. And this is how you improve your trading, by focusing your long positions in strong stocks with bullish fundamentals.
Hey, Mark.
Yep.
For the record, I raised my hand.
Thank you. I suspect a lot of people did. And this is not rocket science. This is not hard if you follow the discipline. So there's where the sell signals were in April, by the way. It's never too late to sell a stock when everything is lined up against you. That's something that you really should take away from this. And bottom fishing is very costly. So the last pattern we want to talk about is what I think the key to making and keeping profits. It's spotting these personality changes where a stock goes from outperforming the market and everything is rosy to underperforming the market. And our relative strength indicator goes from red to green or green to red. So here's an example of a bullish personality change in a semiconductor stock. Cypress Semiconductor had a bearish rating going into January. And then you got a positive earnings surprise. That's why the work that Erin and Tom do here is so important, to alert you to these changes, positive changes that get reflected in analyst opinion changes and so forth. But the key is, with that spike up after the earnings report, the stock started outperforming the market, and then the power gauge rating turned bullish. So do we want to buy that spike? No, just as Tom said, sometimes the best opportunities come after earnings. So we look for what we call that first buy signal after the bullish personality change, when the stock starts to outperform the market. So Scooter will be up around 80 or 90 at that point. You get the oversold buy signal, and that's a nice entry point. And then you get another signal back there in May, but this signal comes with Chaikin money flow positive. This is a pattern we've taught to institutions for over 30 years. Chaikin money flow was first introduced in 1982. If a stock sells off for 5, 6, 8 days, gets oversold, and Chaikin money flow stays green, what does that tell you? It tells you that smart money is taking advantage of the decline. They're not contributing to it. So you get your buy signal with Chaikin money flow green, and then you get a takeover bid. You can call that luck, or you can call that being well prepared. If you're disciplined and you follow the same process day in and day out, good things happen. Now here's a bearish personality change in a very popular stock from 1718, NVIDIA. Stock went from outperforming to underperforming in October. The power gauge turned bearish at 260, within 20 points of the all-time high on October 5th. And the stock dropped all the way from 260 to about 122. Underperforming the market almost the whole way. Institutions selling, and they're selling yet again. Now the semiconductors are strong, so you'll see some sort of carryover strength in NVIDIA, but until they prove that they've turned their business around and that these various markets like Bitcoin mining and AI and cloud computing are still going to be robust growers for them, we don't know. And if we don't know, then I just say stand aside. So everything we've looked at, we call the ideal setup. Warren Buffett calls it the fat pitch. He's famously said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. That to us are the 6 pairs of buy and sell signals, because that's our entry trigger. So what we found is people are busy, and we created our daily email alerts back a year ago in May. And what that does is, for the list of stocks you're following, it tells you before the opening at about 8:10 which stocks have triggered these signals. And I think that's part of trading profitably, knowing which stocks you're following have created an actionable event. So on June 4th, Synopsys, which is in the very strong software group that we're going to look at in a minute, triggered an oversold buy signal at 113.41. Here's what the stock looked like. Dynamic Duo, bullish power gauge, outperforming the market since January. Institutions buying it. I happen to make this my bullish stock of the week in my weekly market insights in February. Actually, my partner Dan Russo did, because he filled in for me as he does every 3 weeks. $96 made Synopsys' bullish stock of the week. And then we got that buy alert at 113.41, and look what the stock did. It rallied in almost a straight line to 136. So if you're prepared and you know what you're looking for, and particularly know that this is a strong stock and a strong industry group, you're going to pull the trigger. And this was a beautiful trade that just evolved in a month and a half. There's your alert buy signal. So now let's get to the crux of what today's webinar is all about, using ETF industry group strength to pinpoint winners, because that's how you get the tailwinds in your long trades. So here's how we do it. We use sector and industry ETFs to find winning stocks. We look at the power gauge rating for the ETFs. We look at something called the power bar that we're going to show you on the next slide. We drill down on strong industries to find the strongest stocks in the industry ETFs with the best potential. So what is the power bar? It's a bull-bear ratio. It's the number of stocks with bullish power gauge ratings versus bearish power gauge ratings in an ETF. It's like looking under the hood, seeing how much gas is left in the tank. What's the potential for an ETF's holdings? So we start with a top-down approach. We look at the 11 select spider sector ETFs, and we see that energy and consumer discretionary are way down the list, along with real estate. And at the top of the list, materials, financials, and technology. Particularly interested in financials and technology. Financials have been leading, but not where you think, not in the major banks, but in the insurance stocks and in some of the money management and brokerage stocks. You saw Schwab earlier as an upgrade. So we start with that, but what we're really interested in is buying strong stocks in strong industry groups. So we look at the S&P sub-industry groups, they call them subsectors, and this shows you where the power gauge rating is bullish. Remember, this is a predictive rating. Predicts future performance. Year to date, semiconductors and software have been leading the pack along with aerospace, home builders, insurance. They all still have bullish ratings. So this is where we want to find our buy candidates. And we want to avoid weak industry groups like retail and oil and gas. So let's look at the software ETF, XSW. It's been leading the rally in 2019. You had a bullish personality change. You can get them in ETFs as well as stocks in early January as you were breaking out of that little flag pattern. And Chaikin money flow was strong, and the software sector, the software group has really been leading. You can see the stocks with bullish ratings in the group. So plenty of names to choose from, including Cadence, which reports tonight after the close. And here's what Cadence looked like. I made this my bullish stock of the week back here in January. So how did I find Cadence? Well, I was looking for software stocks with bullish power gauge ratings that were outperforming the market, where money flow was strong. And you can see Chaikin money flow showed tremendous accumulation. And we got a really nice run in the stock, a couple of positive earnings surprises. There are those big spikes that Tom talked about after they report. Sometimes they consolidate and give you a buy signal. In January, because we were so oversold in December, it just kept going. No chance to get in if you weren't in prior to earnings. In April, you got the spike up and it consolidated, and then we got a relative strength buy signal in early June with the stock around 63.50, and that's your 4 to 8 week move up to 75. So that's what a classic Chaikin bull looks like. Strong stock in a strong industry group. Here's what it looked like in StockCharts. Scooter and Chaikin money flow, very bullish. You don't see the fundamentals. I think that's the missing piece that helps you put this all into play so that when you get a buy signal, you understand what you're doing and why you're doing it. Now let's look at retail underperforming. You had a bearish personality change all the way back in September. Power gauge has been bearish, underperforming the market. And you had this little, what do we call this, a flag pattern? But you had relative strength sell signals in the middle of that, sort of suggesting that it would break to the downside, not to the upside. So we wanted to be avoiding retail. This goes back to March and April. And here are some of the bearish names in the retail sector, stocks like Macy's and Nordstrom. And here's what the charts look like. Here's Nordstrom making a new 52-week low. The reason you want to avoid these stocks is you want to avoid getting caught with that waterfall after a bearish earnings surprise. Now here's a less well-known name, Duluth Holdings. They have those very clever commercials with workmen and itchy underwear. And I love the commercials, but the stock is a dog. And it has been a dog since December. How do we know that? Our relative strength heat map is red. The power gauge was bearish. So that dynamic duo is bearish, and you want to get out of the way. We happen to have a relative strength sell signal right ahead of an earnings report in early April, helping you avoid that bearish earnings surprise. And in case you're thinking of bottom fishing in Duluth, just look at the pre-trade checklist. It's all red. Everything's weak. Power gauge is now neutral. Discourages you from bottom fishing, which is a really good thing. One final way to utilize relative strength, we have a power grid. Everything in the upper right is a stock with a bullish power gauge rating in an industry group that has a preponderance of bullish stocks. Lower left, stocks like Halliburton, bearish power gauge rating in industry groups that are weak. But there's a swap opportunity. Notice that on the upper left, these are bearish rated stocks in strong industry groups. So Netflix has a bearish rating. It has for about 3 or 4 months in Chaikin. But you've got Comcast, CBS, and Dish with bullish ratings, which encourages you to swap weakness into strength. So we've been suggesting on webinars for 3 months now that people should be selling Netflix and swapping into Comcast. This is how you upgrade your retirement plan. If you're trading, you don't want to be trading Netflix on the long side. You want to be trading Comcast. And that's how you use relative strength to improve your performance. So I'd like to show you something completely different. We created a product for people who wanted to get started with Chaikin. We call it Power Pulse. There are a lot of StockCharts users who subscribe because of my appearance on these webinars. And it brings almost all the Chaikin intellectual property into a mobile application. Here's a chart of Netflix over the last 6 months. The power gauge is a ribbon there. You see the rating. At the bottom of the chart, you see that the relative strength in the Chaikin heat map has just turned bearish in the last 3 weeks. So Chaikin money flow is weak, the power gauge is weak, then you get that disappointing earnings report, the stock gaps down, and that's when you're out of time, which my timer just told me. So 3 powerful investment tools, one really great solution to help you navigate the market, the personalized portfolio monitoring in a mobile device that's done for you, stock analysis reports, and you get access to my weekly market commentary. So we'd like to offer this as a special and kick off Relative Strength Week. Power Pulse is normally $50 a month. Like to offer a 50% discount for StockCharts users. This offer is good till the end of the week, till the end of Relative Strength Week. $24.95 a month. You can go to chaikinanalytics.com/StockCharts and subscribe. You always cancel our experiences. People stay with us, but really like to thank Tom, Erin, and Zach for giving me this opportunity. Very proud to be kicking off earnings week that ends with such a great technician, David Keller, who used Relative Strength of Fidelity for years, running the whole technical department there. So thanks, guys. If there's time for questions, I'm happy to do it, but really appreciate the opportunity.
Yeah, it was a great presentation, Mark. Really appreciate you coming on here and doing this. You've been on Market Watchers Live several times. Dan has been on here several times as well, and it's always great information. We stress relative strength on this show. I set my charts up with a lot of relative strength indicators because I don't want to, take a look at a stock that looks good on an absolute chart. There are some stocks like NVIDIA that have actually started uptrending, and you just look at the price chart and things, you say, okay, everything's pretty good. But then when you look at it relative to its peer group, it's underperforming and it's not showing any relative strength. And so I think what you're pointing out here and simplifying to make people think before they get in, I think that is a wonderful concept and idea. I think your strategy is spot on, and really appreciate you coming on here.
Well, thanks very much, Tom. Thanks, Erin. I look forward to the next time.
Absolutely.
Yes, for sure. All right. That wraps up the first guest that we have this week on relative strength, but you're definitely going to want to stick around the rest of the week because we have a lot that we'll be going over and talking about relative strength. Mark made some excellent points. The one that really stuck out was the market wins. When you try to bet against the market and, when everything is stock is going down and you say, well, I don't understand why it's going down. They've got great earnings that just came out, and the company's planning to do this and that, and it just doesn't make any sense. Why is it going down? And Erin, I know, being technical analysts, the same way. Everybody here at StockCharts, I think, would agree that we don't like to ask those why questions.
To some degree, I would say yes. I mean, sometimes you just have to make sure you're not making these correlations between things that don't belong together. But I think it's just critical to do the relative strength and that view of the stocks you're looking at.
Yeah. Well, if the market, is looking at a stock, doesn't like it, I think we at least need to maybe think twice before we get in, because the market does rule, and a lot of money out there. And if the market is favoring a stock or an industry group, it's really difficult going against what the market thinks. If you've got a bad industry group, you're trying to trade a stock within it, you're literally trying to swim upstream. All right. Well, we are going into the 10 and 10. Are we ready to get things going?
Absolutely. I know we're running a little late on time, so we can skip the RRG and let's just go right into AT&T. And actually, two people, I think before they even knew that we were covering AT&T, asked for it. So this is a popular one.
Yeah, I haven't been a big fan of AT&T, but it did make a breakout at the end of June, early July, and it has pulled back now. Last 7 or 8 days, it's pulled back. I would just simply say this: it hasn't been a great long-term performer. So with the recent breakout, if it can't hold this area of support right at about 32 and a quarter, you've got the 50-day moving average at 32.08. I think this is a key area of support. So I'd have a pretty tight leash here.
All righty. Next one up, and it looks like the most popular is Intel.
All right, Intel reports earnings later this week, so make sure you keep that in mind. And I think when we look at the relative strength, I think you'll see a little bit of what we were talking about, what Mark alluded to here. Look at Intel. Intel looks like it's in a nice trend, and it's not bad. But what I would simply say is when I look at this relative strength, and this is what would keep me out of the stock, I just think there are so many other stocks within semiconductors that are trending higher relative to the group. Here, Intel is struggling. We actually had a little bit of a bounce back at the end of May on a relative basis. We're not past that, even though the group has been moving up. Intel is going up because of the group. Rising tide lifts all boats kind of a scenario here, but it's not outperforming. So it's going up because the group's going up, but you don't have a leader here. So I don't like Intel. I much prefer AMD over Intel based on the way it's been trading. And like I said, Applied Materials, Lam Research, IPHI. I think there are a number of different semiconductors that look better than Intel. So I would pass. The other one thing I would say here with Intel is it had a big gap down. You've got some gap resistance that it is quickly approaching near 52.5. No guarantees there. So I would avoid Intel.
All right. Would you hold it if you owned it?
I would switch it out. I think just like, especially since it's getting close to a key technical level, I'd switch it out for one of those other names. I definitely like it. Advanced Micro Devices better. I own it.
All right. Sounds good. Yeah, AMD has been quite the winner. This one has been patiently asked for I guess the last week. So I feel bad because it looks really parabolic right now. NM Navios Maritime.
Yeah, these stocks really get me in trouble, and it's not a real heavily traded stock. As you can see, there are pockets where you get a lot of traders jumping on it, but by and large, when you look through here, it doesn't trade a lot of shares, and it is literally like parabolic at this point. So it's been a great stock. There's no way I would chase a stock like this. Just my own personal trading style. It's not that this can't go higher. It's the risk that you're taking. You can't it's very difficult to manage risk on a stock that's been going up so much in such a short period of time. So I feel like if I got in and I set my stop, I'm probably just inviting myself to get stopped out and just take a loss. So I would be waiting maybe for a better entry if you're really convinced you want to be in this stock. It goes down sometimes as fast as it goes up. We've seen that before. Big move up, big move down, big move up. Maybe we have a big move down. I would be waiting maybe closer to 5.5 before I'd even consider it.
All right. Sounds good. I know for me, when I get a mover like this, I set a trailing stop. I want to book some of those profits after it's gone parabolic. All right.
Yeah.
The next one up is Etsy.
All right. Yeah, one last comment on this one too. A lot of times you get these big reversing candles on heavy volume. That can be a pretty good signal of an impending move back to the downside. So far, looks pretty good, but we'll see. Etsy.
Yep.
Yeah, I saw this one was actually on Mark's list of retailers, that have a bearish signal. This is one that I'm okay with. I agree. The retailers in general, you want to be careful with. It's trying to come back up. It's consolidating, and it's consolidating a huge move. So the last 6 months, this has not been a very good stock relative to the S&P 500 or even relative to its peers, but it is still holding on to this relative strength area. So I might give it a little bit of room if I was holding it, because it has been one of the better performers, or at least certainly was. I think the area that I would watch is this 57.5. I think we're in a trading range right now, kind of in the middle of it. I give this one a shot, though, to go higher. I'm still okay with Etsy.
All righty. Next one up would be E-Trade Financial. I'm liking it as a possible entry for myself, but Not that I'm going to go buy it, but I think as far as my indicators go.
All right, E-Trade, yeah, it's starting to move up, nice volume. The big thing here for me is just financials have not been good. And when you look at E-Trade relative to the investment services group, starting to show strength. So the way I trade something like this, if I believe I'm catching the start of a move, I just want to have my stop in play. Very tight stop. The rising 20-day moving average should hold. So I would simply have this on a list and see where I would put in probably right in here. It's been holding that 20-day moving average. I think $46. I'd keep a very tight stop here just because it hasn't been part of a great group. It starts to roll over. I think you really want to avoid holding a stock like this that's weak and starting to break back down again. So just keep your stop in play.
All right. How about Simply Good Foods, SMPL?
Yeah, this is one I've talked about. I really like the stock, continues to perform very well. Looks to me like maybe a little bit of a cup off of the recent uptrend. So when you draw this in here, you can see right here off of that big uptrend. I think it's pretty clear. We got a nice little cup. Volume kind of weakening here. I don't think we're going to get the breakout. Maybe we get a pullback, hit that 20-day, or maybe even pull back to that recent low right here on 26.5. I would be a buyer at that level. Great volume coming in, supporting this move to the upside. You got a tremendous relative performer versus its peers. So I like the stock. I just don't like it right up against resistance here. I either want to see that breakout or maybe pull back and hit that 20-day.
All right. Next one up is Chemet Corp. Looks like it's doing pretty good in its industry group right now.
Is that KMT?
KEM. Sorry.
All right.
I just always forget you don't know every symbol.
Yeah, I get it. I probably would have guessed that second. But let's take a look here. Yeah, I'm not a fan here. I don't like, there's a relative high after a huge gap down with heavy volume. Haven't been able to get back through. We're strengthening here a little bit. I think it's got a lot of work to do. And when you look again at relative strength, it's been very weak. If I was in it, I'd probably keep a trailing stop below that 20-day moving average.
Awesome. Next one up is TRHC, and that would be, well, Tabula Rasa Healthcare.
All right. I will take your word for that.
I know, right?
TRHC starting to show a little bit more volume, a little bit more strength. Let's see, relative strength line still. This is another one where, okay, if I'm thinking that I'm starting to turn higher, I would really like to have seen more of a volume boost to the upside. I would, again, just have to keep that stop in place at that 20-day moving average. I know it sounds a little bit like a broken record, but I think when you get these stocks that make these moves to the upside and start to show a little bit of strength, but they haven't been great relative leaders, I do not really want to give up a whole lot of room to the downside. In fact, I probably wouldn't even buy it unless it tested the 20-day. And if I really liked it, I'd get in there and I'd keep a very tight stop.
All righty. Next one up is SGMO, Sangamo Therapeutics.
Yeah, this is in that biotech space, I believe.
Indeed it is.
Yeah, and biotechs have just struggled. They still, you can see them still trending down relative basis. Look at biotechs relative to the S&P 500. Been downtrending for 7 months now. Still no end in sight, even though July has historically been the best month. This stock, though, has been a pretty good relative performer. So it's sitting near about an 8 or 9 month relative high. It's had some nice volume on some gap ups, which is typical with a lot of these biotech stocks. Again, you've got your 20-day moving average to the downside. What I'd really like to see is a break above these two key areas of resistance. That huge gap up back in April, and then the other one just a few weeks ago. I think 13 to 14 is going to be a key area to get through. If we ever get biotechs moving, this could be a great stock. But I think part of it is just there's not enough money rotating into the group.
All right. And the next and last one, Viavi Solutions, VIAV.
All right, last one up. Yeah, I like this one breaking out, like the volume trends for the most part. Nice relative strength. A breakout above this area would signal a move to a new relative high versus their telecommunication peers. So this is the type of chart I like, though, moving up from left to right across here. got great volume. I think what I would do is maybe watch that gap support level to the downside, but otherwise, I think this is a great looking stock. I think right in here about 1375, 1380 is what I'd watch.
All right, and that does complete the 10 and 10. There you go with all those symbols. I'll have those up after the show. We will be right back with Monday Setups.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
All right, it is time for our final market update before we get into Monday setups. As you can see, the markets are really, they had a pretty decent morning, and then they opened higher, but now they dropped, but now we're looking at some positive numbers now. The Dow is up just over 2 points. S&P 500 up almost 8 points. NASDAQ is now up 51 points, or 0.63%, definitely the best one out there. Besides the NASDAQ 100, NYSE is on the positive side now as well. Mid caps are starting to recover, and Russell 2000 is starting to look a little bit better. Treasury yields down 2.034% current reading. VIX is falling. It is at 1392. UUP is making its way higher, up 3 cents. Gold GLD is up 8 cents, not very much, but still on the positive side. USO is also up. It is up 2 cents to 11.69. TLT, big gap up and now consolidating sideways, but up 49 cents. And that is all I have for the final market update. I'm going to pass it over to you, Tom.
All right, I'm just going to look at an intraday chart here on the S&P 500. I put one of these in my blog this morning. It was actually the NASDAQ hourly chart, but I thought I'd take a look at the S&P 500 and just show a couple areas maybe to watch. I think, we had that pullback last week. This historically is not a great week of the year, all the way through the close on the 24th, which will be Wednesday. So looking down here at some of the levels, I don't know, maybe this gap support right here has not been filled yet. So if the market were to continue weakening, maybe we could look down around 29.40, 29.45 as a key area gap support that maybe would turn higher. I think the other thing, and I drew this into my chart on the NASDAQ, so let me see if I can do it here as well, see if things line up. Maybe something like that, and drag this down right in here. Actually, that does kind of line up. So we're kind of right at the bottom of this channel right now on the S&P. So if this fails, I would say if we move back down into negative territory today and finish there, I think that might open the door to filling this gap to the downside. But if we do hold and start to rise back up later today, I think maybe the worst is behind us, and then we go higher. All right, that is your market update. We're going to move now into Monday setups. I know last week I was not around. So Erin, it was you and Mary Ellen. What'd you have?
All right. Well, I had OKTA. It was up about 1.5%, and Mary Ellen had Sienna, CIEN, and it was down about 1.5%. So I guess if you put us together, we broke even. So not too bad. This week, though, as we always say, you're only as good as your current picks. So I'm going to go ahead and I'll grab it and go real quickly through the ones that I have. And again, it was trending higher. I think I would hold on to it, but this is a really weird PMO. All right, so I will go to view all since we're kind of running low on time here. We'll look at them in candle glance first. All right, so these came up on my general PMO scan. That's the one I've printed and had out there forever. I didn't use any other scan, and I thought these all looked really good. But one I thought looked better than the others. As you can see, I think Shopify is doing good. It looks like it's trying to break out right now from an ascending triangle, so I thought that one looked particularly good. And my pick actually ended up being AAXN. So why did I pick it? Well, the 20 just turned up above the 50-day EMA. The PMO is on its way up and back almost to zero. Nice look on the volume, you can see we're making a higher high on the OBV. And of course, it's in that hot zone. So I like Axon, AAXN, and I guess it's at this point at 6607. So I would be looking for an upside target around 75. I would probably set a stop for an intermediate term investment. I probably would go all the way down to the $60 range, somewhere in there. But I'd certainly be raising my eyebrow if I didn't manage, if the price didn't hold that low, short-term low. So I'm going to pass it to you. I know, like I said, I know we're running a little late, so I didn't want to go through every chart.
All right, I am going to go with APPS this week. Let me just make sure I got an up-to-date price here, $4.85. I actually bought this one today. It's one that's on my strong earnings chart list. Stock had been up over 550 last week, so a week ago it was over 550. Today it's 485. I think the pullback, stock's been straight up. I know earlier Marc Chaikin talked about how strong software stocks have been. We've mentioned it on here so many times, how awesome that group has been. So this is a stock that had been one of the leaders. You can see on a relative basis turning down as it goes back down. But the breakout, the last breakout here at the end of June was at about this 480 area. And I think we're just coming down and testing it. You can see we did go down earlier today and hit that 50-day moving average, which has been a great area of support throughout this uptrend. So I think APPS from here, 485, looks good. Maybe just a couple of others I'll give you real quick off of my list. Talked about Applied Materials earlier in the show. I also put this in my blog today. I just love the way Applied Materials looks. Look at the relative strength here. It is absolutely flying versus the semiconductor group, and semiconductors are moving higher as well. So I think that's a really good combination. The only reason I didn't pick it here is now it's just gotten too stretched. With today, it's up another 5% from where I'd posted earlier today. I just don't, I don't want to chase for a 1 week contest, even though it is a very friendly contest.
Quite friendly.
Yep.
At least between you and me. Now, I don't know about the viewers.
Yeah, well, it's always friendly between you and me. FDS versus the Publishers Group, you can see has been coming down, but it was after the lengthy outperformance to the upside. This one's pulled back, I think, right near a key support level around 280. A move back up above these moving averages is what you want to see, but I think you can keep a fairly tight stop here on FDS. So that one I think looks pretty good. So I'm just going to go with those. I know you've got sentiment to go over. So here is our Monday setups, or here are our Monday setups for this week. Erin goes AAXN 6607, and I've got apps, APPS 485. All
right, looks good. Okay, it is time for sentiment. I'm going to whip right through that. Let's go ahead and get started. At this point, it's for July 22nd, obviously today. These are the various sentiment gauges that I'm going to be looking at. I want to reiterate that sentiment is a contrarian indicator. So basically, when all of these are showing bullish, information with investors being bullish, etc., that's actually not a good thing for the market, because if everybody is very bullish, that typically is where you're going to start seeing that turnaround, and you can see that with the VIX pretty much every day. All right, so in summary, that is going to tell you what we're going to see on these charts. So let's go ahead and get to the charts first. So I'm going to start off with the 10-day moving average of the put-call ratio. I do invert my scales because overbought should be at the top and oversold should be at the bottom. What I'm noticing about these, I think, are actually pretty bearish right now, mainly because usually when we top out and start our move lower, that's generally when we're going to start seeing a decline or a continuation of a decline. We topped out, we tried to come back up, and like I said, we're now falling. At this point, I would be watching to see what turns out to be oversold territory. I mean, you can see back in that really great rally in 2017 going into the big decline at the beginning, at the end of January, you can see that the range was pretty tight. I'm not seeing that, and we haven't seen that for quite a while, but I think we could maybe start seeing that turn around and get that range tightened up. But for now, topping and moving lower, and that typically is bearish for the market. So that is what I'm looking at there. AAII, investor sentiment. This is a a poll, and if you go to aaii.com, you will be able to find it under their reports, and you can take that poll as well and look at these results. The one thing I wanted to point out mostly on this chart was, again, another increase in the bulls. I wouldn't say that we are in that overbought or area. I would guess we're not seeing, that much in the way of bullish activity. What you want to see are these really extreme sorts of looks. And at this point, we really aren't seeing that kind of an extreme just yet, but bullish sentiment is rising, and that means that it's starting to be bearish for the market. At this point, again, you're not even about halfway into that zone where you go from there even up to when you have twice as many bulls as you do bears. That's when things get really stretched out. So that tells you that when you look at that particular reading, you can see right here that it's, while rising, it's still rather low because we're not getting that bull bear ratio much past 1.25. Next one up is the National Association of Active Investment Managers. This is their exposure index. It tells us how exposed they are to the market. You can also get this information for free at NAAIM.org, I believe it is. And at this point, you can see that exposure actually was pulled back slightly. I'm not going to look at that as money managers being particularly bearish, because these readings are still rather high in comparison to those lows we look for on this to give us that sense that we're ready for a really nice bull market move. At this point, like I said, it's still on the higher side, reading right now at 81.85 or about 82. So I would look at this as that they are still exposed, and I would look at it as a neutral to bearish position for the market. Wall Street Sentiment Survey. This is handed out via email to market timers, of which Carl and I are poll takers there. We basically get the poll email on Fridays, and we have to tell them whether we think that the market will close higher or lower on the next week. And I thought really interesting, we lost quite a few bulls here and added quite a few bears. And when you look at that ratio, we're now really low ratio. And, typically, let's go ahead and look at it here, just so you can see what I'm talking about with the typically. So here are really low readings. So I'm going to just draw in a few of these vertical lines, and it gives you a sense of what generally happens when we start seeing these very low readings. It's not always consistent, but typically when you get those low readings, that means that the sentiment is very bearish. You do have that bull bear ratio. And so what I would say at this point, when I start seeing this kind of bearish activity, generally our market timers, and not to pat anybody on the back, but maybe so, we tend to be pretty good in the short term, typically. As you can see back here, we were sitting in that very bearish position, and we still got that follow through on the decline. So those are the things I kind of look for. This one, you had a pretty nice peak. Actually, I'm going to bring it to this one because that's a pretty nice peak on the bears. And in this case, you did get a little bit of a continuation to the downside on the following week. So they're not always, this one's not always contrarian, so it does make it a little tricky when you read it. But overall, I think I'm seeing this increase in bears, and typically that would be, I would say, neutral to bullish / bearish. I guess that means it's just neutral. I'll put it there. All right, next one I'm going to look at is RightX Asset Analysis. Love this chart. It gives us a look at how many assets are in a basket of bear funds versus bull and sector funds, and then right there in the middle are the money market funds. So you have an even amount on these two, and we just, like I said, we just cover the money market. That gives you kind of the neutral money, maybe some scared money in there as well. Right now, what I would note is that we're seeing a lot of money being pulled out of the market in both the bear and the bull funds, and they're moving into safety of the money market. So that tells me that, we're starting to see a little bit of bearishness here, the fact that we're moving into those money markets and out of the market. And so if we see bearish activity, that means that it is bullish for the market. All right, just a few more here. Let's go ahead and look at the ultra short-term indicators. I do use the VIX on an inverted scale to give me an idea of overbought and oversold. Typically, when you get down to these lows, that is the signal that you're going to start to see a turnaround. That means, of course, with a higher VIX, people are nervous. They're not as complacent as when the VIX is very low. And so sentiment being contrarian, if everybody's feeling very bearish in the short term, that really should signal to you that there's going to be a reversal to the upside. And I was looking for a reversal coming off of this touch of the moving average, because that had been a really good signal for those price bottoms, but we're now falling a bit below that. We might see an increase in the VIX a bit more before we get that upside. I do see these spikes though right now on the advances minus decline to the negative side. I'm going to read it honestly at this point as an initiation, a selling initiation, because we still have some room to fall on that VIX. Next up will be our gold chart, and I've been looking at the weekly because I think it really shows you the best information right now as far as gold. As you can see, we have gone back a little bit off of the highs back here from April as far as the discounts go. The discount rate is still, I would say, pretty high on that Sprott Physical Gold Trust. As you can see, we've seen, mostly lower discounts previously. So we are still seeing some fairly high discounts. That's bullish for gold. I like the fact we're forming this flag. We're really basically consolidating that really spectacular rally that we got earlier. And it makes sense, but the weekly PMO is still climbing. I really like that chart. All right, so let's go ahead and I will summarize what we've been looking at. And there you go, put call ratio, it's declining from overbought territory. Typically that is bearish for the market as it continues to fall. AAII, we're seeing that continued rise of the bulls, which is typically bearish for the market. Name, we're seeing a pullback in exposure, but it's still rather high, so I would say that's bearish. Wall Street sentiment, expansion of bears, lower bulls. Neutral to bullish for the market just because of that expansion. And then the last couple here, we've got RIDEX ratio moving to cash. I'd say that's neutral to bullish. Possible selling initiation is what I'm looking at on the VIX. And the gold sentiment, of course, the discounts are elevated. And so I would say I'm still bullish on gold. And then if you look at the tally sheet, I would say overall sentiment is telling us that we have bearishness coming forth in the market overall. So that's all I had for this sentiment report. I'm going to send it to you, Tom.
All right, sounds good. Yeah, I think the market's really interesting at this point, especially with so many earnings coming out. I think we're going to find out those who think that maybe we're not going to have enough earnings to support the market. Well, I think that we're going to find out here over the next couple of weeks. And that was kind of the reason for the poll question today. Do you use fundamentals in your stock selection process? 71% say they do. I know earlier when I was looking at this, Erin, it was 50-50. And I was a little surprised that more weren't using fundamentals, but this makes me feel a little bit better.
Yeah, and I did put no. It's hard to say just yes and no. I don't use the fundamentals as, kind of the basis for my stock picks. I kind of use it to just see what's going on in general. But when I actually get down to the brass tacks, as they say, and I run my scans, my picks are coming from a scan, technical scan. And I do have to analyze what comes out of that. And so I do pay attention to fundamentals. But as far as my selection process, I have to say that it would be more mechanical.
Yeah, I use my strong earnings chart list as kind of my basic chart list.
Right.
Scan off of that. So I do trade using fundamentals for sure. But like Marc Chaikin was saying earlier, the technicals, the relative strength, all of that's very important as well.
Mm-hmm.
All right, there is your upcoming schedule for the rest of this week. Of course, it is relative strength week, so you can see a lot of folks there that we'll have in later this week. Want to thank everybody for joining us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. See you tomorrow. Happy trading.